Hey guys, welcome back to another video, and today I'm kind of here to go over a play and how I would make a play on earnings. Be sure to like, subscribe, also comment down below what stocks you guys are buying, what plays you guys are making. I'm very interested. So without further ado, let's get into it. Just to start off, I do want to show a move I made today in the portfolio. A stock that I bought after hours yesterday, Celsius. Bought a little bit more of this, down 15% on my position overall, but I do want to build this position. I like this company, but it really just is in free fall right now, down 30% in the past 3 months, 20% the past month, past year down 60%. So this is a company that really needs to change it around. We need a strong earnings with strong guidance, and we need to see something change within the company. PayPal reported today. They actually are down a lot, and also State Lauder reported this morning, and they're down a lot as well, but that's okay. I want these companies to go down. They're great companies that I want to invest in, and as long as the sentiment doesn't change on the company and the stock price is the only thing that changes, then that's okay with me. Make them go down. But this one, I think Elf dropped in relation to Estee Lauder. They haven't come out with any news, so I think this is kind of just the same space play. But as you could see, I did buy 21 hours ago. I bought almost $400 of Elf, and then just 24 minutes ago, I bought $200 of Elf. This is one at this price I feel like I can't pass up. It's at $86. This is a stock that just, not even a month ago, it was at 133. So this is one that I think could have a quick bounce back. It's falling like crazy right now, but I think one strong earnings and we're back at those 133 levels. This is a stock that I really like, especially for the long term. They were growing faster. As you can see, they're also hitting. I'm not a big technical analysis guy, but they're around that point of resistance. Um, but yeah, I mean, you can see they were 210. I think before the company, I think in the company's lifetime, they're going to get back to this price. I think that's a pretty fair estimate to have with this one. So, and I think they're going to get back to that price relatively soon. It's not going to be a long thing. So I think buying it at this price is just even better than buying it at $90 because I would have bought it at 100. I would have bought it at 90, but if it's at 86, I'll buy it. Take it to 80, take it to 70. I want more shares. The more shares I can get, the better. So I'm happy with what's happening with that. I'm going to keep buying. But the play I wanted to talk about today is with AMD stock. One of my top holdings here. I have almost 30 shares in the portfolio. They're up 3.62% today, and I hold a lot of AMD shares. My today's return is almost $120 off, not even 4%. So for my portfolio, that's a lot. 22% of my portfolio, and as you can see, they're having a really good day. And I think that's build up to their earnings after hours today. So this is a really big earnings for AMD, especially in the AI space with them being in that volatile space and what's going on. I've been buying up AMD like crazy. Been adding to my position a lot. But with their earnings after market today, this is going to create a lot of sentiment for the company. I think this is a very volatile earnings. I don't think they're going to drop 2% or go up 3%. I think there's going to be either a 10% rise or 10% plus drop or 10% plus rise, like in either direction. I think it's going to be a big move. So that's what options are great for. And I was looking, there are some cheap options. So calls are very expensive because the stock has risen so much today. The calls are up almost 60%. So that's not really what I want to get into. I was looking at the puts. So also, this is a hedge against my shares. If the stock does go down, then I won't lose as much money, and if the stock does go up, then I'll make money. So I'm happy with this. But I do want to look at the cheaper contracts. These are only expiring in 3 days. Let's see how much more expensive the 10-day ones are. So I might go for a 10-day one. Not 100% sure, but I'm looking. This is if you guys were to make an earnings play, this is how I'd base it. So I'm basing it off of it making a bigger move than what's expected. So let's see. So this is the website I really like to go to for these kind of plays. So let's go to earnings, and then let's see release dates. So on their release dates, historically, AMD has moved 7% down, 10% up, 2% down, 9% down, 4% up, 10% down. So they're not a huge mover on earnings, and as we can see, this is the important thing. AMD is going to report earnings on February 4th, 2025 after market close. The options market overestimated AMD stock earnings move 50% of the time in the last 12 quarters. The predicted move after earnings announcement was 7.7% on average versus an average of the actual earnings move of 7.6%. So this is what we need to know in order to make money with these earnings calls that I want to buy, at least the cheaper ones. And then this is the IV crush. So the AMD's last earnings implied volatility going into earnings was 55.2, and then their volatility dropped to 46, resulting in an implied volatility crush of 17%. So the average implied volatility crush for AMD earnings is 16%, not crazy. So that's where I like to go to option strat. Okay, so AMD on average moves 7% up. In the past earnings they move 7% in either direction. That's what the market is expecting. So let's go to AMD right here, and we're buying a cheaper one. Okay, so let's say they do, move. We're not basing this on if they're gonna move 7% down, but they're at 118, so 7% down from that. So that's $8 down. So probably gonna be around 110 if we go down 7%. And then this is what we're betting on. We're betting on AMD going down even more. So we're betting on AMD going down 14. I don't think this is gonna happen. I think AMD is gonna crush earnings. But if it does happen, then I want to be there to reap the benefits. So we're thinking AMD is going to go down all the way to 102. This option is very cheap because this is not likely to happen. There's not even a 102 option. But we can go to the 103 one. But we can see it's $53 because people don't think AMD is going to go down that much. So this is why it's so cheap. Also, the implied volatility it drops an average of 16%. So if we take this down 16% to what it would be after earnings, the stock needs to drop 7% for us to even make money. And then if it does drop that 13% like we want it to, then good things will probably happen for the option. But I don't want it to do that. I don't want the stock to do that. The more it drops, the worse for my portfolio. So this is kind of just a hedge. It's a $50 hedge. If the only thing that could mess up this option is if the stock drops like 5%, that would kind of leave me out in both regards. But then I'd probably just buy more shares, so I wouldn't be that upset. But yeah, I mean this is what we're betting on. We're betting on the stock dropping a lot. As you can see, the break even is down 13% at expiration of the option. So we need that big move down if we want to make money buying a put this far out. This is what I like to do. It's 2 standard deviations away from the implied move. So I actually learned about this from Trading Fraternity. I watch his streams, and he looks at this average move, which for this stock is 7%, and then he takes it times 2 in case there's a big move, and that's where you really cash out, because if there is a big move on AMD, we're really going to be able to cash out. But if there's not, then we're not going to cash out. I mean, it's as simple as that. But I think with what's been going on with this stock, there's more likely to be a big move in either direction, hopefully not down. But at the same time, I already have shares, so I want to have some exposure to the downside, so may as well buy it. And also we can see the same thing for calls, which are more expensive today because the stock is up 4%. So let's see, the expected move is 12%, or is 7%, so let's say 14%. So to the upside, that would be, it's at 118 right now, 126, and then we go 4 more, that's 134. So let's see, yeah, it's $110, and if they do go up that 14%, even after the implied volatility crush, actually, we'd be up a good amount. almost 3 times. So yeah, but that's the thing. If the stock goes up 5%, then we might make money. But that's the risk we take. But I actually like, this is where you can get into some uncharted territory. This is where you could buy a strangle. I mean, there's a lot of options, but I mean literally. But yeah, like you could buy something like this. So this is $164. If the stock goes up, I mean, this is after the IV crush. You could see we're down an average of what is it, 16%, what it usually does. So I mean, yeah, as you can see, if the stock goes up 6%, we're making money. If the stock goes down 6%, we're not making money. But if it goes down 13%, we are. So this is in this is in hopes of a big move. If there's not a big move, then this won't be worth it. Like you can see, the break evens are 101 and 135. So this is in anticipation for a big move, which I think can happen. Definitely. So I don't think this is a horrible play actually to make, but if the stock does go, if the stock trades flat and doesn't have a big earnings, like they've dropped only 2% or gone up only 2% before, then we lose almost all of our money. We lose a fourth of it if they only go up 5%, and then we double it if they go up around that 13%, that double standard deviation. So with that being said, I'm thinking about making this play. Definitely gonna buy a put. Definitely gonna do that. Might buy a call. Still thinking about it. But these puts look very good. They're very, very well priced for what they are. Their deltas are less than 1. But if the stock does drop, a lot, then yeah, I mean they're gonna cash out, and my shares are not. So this is just good protection to have. I don't have a lot of money in it, so if I had a bigger portfolio, I'd probably buy more downward protection. Just want to have exposure to both sides. I'll also buy more shares if AMD goes down, especially with the profits from that. And then I'm also adding to my PayPal position. I love that company still, down 12%. Estée Lauder down 16%. Love the company still. So yeah, guys, this is just something I want to talk about with earnings season. Don't let the earnings make you think a different way about the stock, unless something really did change bad on the balance sheet or the guidance actually dropped a lot. If you still have the same feelings about the stock regardless of the price, I'd say keep investing. There's a lot of great companies out there that have one bad earnings and miss, or like Meta or Tesla or any of them. There's a lot of companies that will have one bad earnings, and then the next one they'll bounce back and be up an insane amount. So yeah, that's what I wanted to say. Don't get scared when a company has a bad earnings. If you really do believe in the company, take it as a blessing and buy more while you can for a cheaper price. And yeah, that's all I wanted to say today, guys. I hope you make that AMD play with me. I'm probably going to make it, probably going to sell some shares or deposit some money and make that play before market close. But besides that, I'm just watching these earnings today. Google, Tesla, Meta, a lot of big dogs reporting after hours today. So we'll see what happens. So thank you guys for watching. It's been a good one. Be sure to smash that like button. Also subscribe if you enjoy this content. And also drop a comment down below what you guys are buying, what options you guys are buying, what stocks you guys are buying. I'd be very interested to know. So yeah, I'll see you guys in the next one. Have a great day. Happy market. Peace.